Hi, good morning, Puneet. So, what we are seeing is a 4,000 crore of a fundraise now in focus for Tega Industries. Now, just last week ago, we saw all the talk about how Tega Industries is going to be acquiring Molycop, which is, one of the leaders that we are looking at in terms of meal solutions. This is for a consideration of about 13,000 crore that we have looked at, considering that Tega's market cap before the acquisition was roughly this size, and it makes, Molycop makes about 8 times the revenue. So, for the same, we did talk about how they needed a 3,300 crore of a contribution for this particular deal that we are looking at. So this QIP is in focus just on the back of this. In fact, with this, they've also raised the borrowing limit to 2,000 crore that we are seeing. So just on the funding part, if you just have to break that down again, if you are looking at that, company needs about 3,300 crore as part of its contribution, while Apollo will be contributing about 1,000 crore. Do note that Apollo will hold about 23% stake, while Tega will hold about 77% stake in the company going forward. Now, with this, this includes about a 966 crore of a debt proportion. Along with that, 250 to 260 million dollars would be the equity contribution that we are looking at, and the rest of the funding, if you are looking at, will be arranged by SPV using debt, internal accruals of Molycop, and Apollo's funding as well. Do note that of this 13,000 crore of overall picture that we are looking at, consideration that we are seeing, a majority part of it is Molycop's debt as well, which would not be reflected in Tega's books of accounts. So that was, one concern that was reflected in the kind of stock performance also that we have seen for Tega. But again, why the big leap that we are looking at in terms of this acquisition? Now, this will enhance Tega's overall mining solutions portfolio with grinding media and mill liners that we are looking at. It will also expand their presence in US, Canada, Australia, and Latin America. And in total, they'll also have a combined 26 manufacturing facilities as well. Onto this acquisition, the company also did host a conference call wherein they did say that the EBITDA margins will expand from 11.5% to 15% forward. Along with that, they'll also unlock EBITDA level synergies worth about $20 billion by year 2. And if you look at Molycop's debt, with the Apollo's funding coming in picture, the $1 billion debt that they currently have, that would reduce to $780 million by day 1 itself of this, acquisition that we are seeing. So that is an important point to take note of. This would not be reflected in Tega's Industries as per what the management is suggesting. However, with the fundraising in picture, we do note about equity dilution of about 10%. Currently, they hold about 75% stake, which will come down to 64% or so that we are looking at. Now, coming to Centrum on what they make of this deal. Firstly, on the positive side, while they've revised the rating to add versus buy, they've raised the target price to 2,255. They say that this deal is a once-in-a-lifetime opportunity for the company to become a global leader in this solutions that we are looking at. Standalone business would also be remain insulated from Molycop's debt structure that we are seeing. However, investors should remain concerned in the short term on concerns related to huge scale of operations, high leverage, and entry into new products and countries as well. Considering this, they have assigned a combined EPS of basis on H1 FY28 that we are looking at, of a 25 multiple that we are seeing for a PV. So this is the overall picture that we are seeing for Tega Industries, and the overall fundraising size also that we are looking at.
Well,